Have you ever stared at a trading chart and it just looked like a bunch of, well, confusing bars? What if you could actually learn the secret language of the market? Well, today, that's exactly what we're going to do. We're decoding candlestick patterns, turning that chaos into clear signals that can really sharpen your trading game. Right? This is the exact question every single trader wants to be able to answer. And you know what? A lot of the time, the clue is hiding in plain sight, right there in the chart. That's the power we're going to unlock today, the ability to read the story the market is telling you, one candle at a time. So here's our game plan. First up, we'll get the basics down. What is each candle actually telling us? Then we're jumping into the really fun stuff, spotting patterns that scream a market U-turn is coming, and others that tell us, hey, stay the course. And we'll wrap it all up by building a toolkit and a pre-trade checklist so you can actually use all this with confidence. All right, first things first. Before we can read the story, we have to meet the main character. So, what in the world is a candlestick, and what is it trying to tell us? Okay, think of each candle as a little snapshot of a battle between buyers and sellers. The thick part, that's called the body, shows where the price opened and where it closed. Those little thin lines sticking out, the wicks, they show the highest and lowest points the price hit during that fight. And the color tells you who won. Green means the buyers pushed the price up, and red means the sellers pushed it down. Simple as that. Now for the really exciting part, spotting a change before it happens. We're going to look at patterns that act like big, flashing road signs, warning us that the market trend might be about to pull a complete U-turn. These are what we call reversal patterns. One of the most powerful reversal signals out there is the engulfing pattern. And honestly, the name tells you everything you need to know. It's when one candle's body is so big that it completely, well, engulfs or swallows the body of the candle right before it. So let's break that down. A bullish engulfing is when a big green candle swallows up a smaller red one. It's a huge visual clue that the buyers just stormed the field and totally overpowered the sellers. And a bearish engulfing? You guessed it, it's the exact opposite. A giant red candle tells you the sellers just took complete control of the game. And here is the absolute perfect scenario for this pattern. Just imagine the price is falling, right? And it's coming down to a key support level. Think of that as a price floor where the market has struggled to break through before. You see a little weak red candle form, and then bam, a massive green candle just engulfs it. That is a powerful signal that buyers showed up in a big way to defend that level. Okay, next up is the doji. When you see one of these, I want you to think one word: indecision. The price opened and closed at almost the exact same spot. It was a tie. Neither the buyers nor the sellers could win the battle. And that kind of uncertainty, it often shows up right at the top of a trend, just before things turn around. Now, the doji actually has a whole family. But don't worry, you don't need to memorize all of them. Just notice how their names give you a hint. The gravestone doji with that long wick pointing up, it looks like a gravestone for an uptrend. And the dragonfly doji, it kind of looks like it's ready to fly up. But no matter what they look like, they all tell the same basic story. The trend is running out of gas. Let's look at two more really powerful one-candle patterns: the hammer and its evil twin, the shooting star. The hammer's long lower wick tells a story all by itself. It says that sellers tried as hard as they could to push the price way down, but the buyers fought back like crazy and managed to close the price all the way back up near the top. That's a classic bullish signal. The shooting star, it's the exact same story, just flipped upside down for a bearish reversal. Okay, so now we know how to spot a potential U-turn, but what if we want to just ride the wave? Well, sometimes the charts give us signals that the current trend has a lot of gas left in the tank. We call these continuation patterns. This one is super easy to spot. It's the momentum candle. All it is a candle that is dramatically, 2 to 3 times larger than the candles that came before it. Its sheer size just screams a sudden burst of conviction in one direction. And this pattern is most powerful when it shows up after the market's been going sideways for a while, just kind of choppy and boring. You know why? Because a ton of traders have put their stop-loss orders just outside of that boring range. So when a huge momentum candle breaks out, it triggers all those stops, which basically just adds a ton of fuel to the fire and pushes the price even farther. All right, now if you want to see what pure, undisputed control looks like, you look for the Marubozu. This candle has no wicks at all. It's just a solid rectangle. And what that means is from the second the candle opened to the second it closed, the price only moved in one direction, period. So a solid green bullish Marubozu is a super strong signal that an uptrend is going to keep going. A solid red bearish Marubozu tells you sellers are in total command, and the downtrend is still going strong. The lack of wicks here is everything. It just screams absolute conviction. Okay, listen up, because this next section might be the most important one of all. We have all these powerful patterns, right? But using them all by themselves is, frankly, a recipe for disaster. You need a toolkit for confirmation. I absolutely love this quote because it is the golden rule of candlestick patterns. Say it with me. They are hints, not guarantees. They are one piece of evidence in your case, not the final verdict. Please never forget that. So, what other evidence should you be looking for? Well, first, context is king. Is that engulfing pattern you saw happening at a major support or resistance level? Because that makes it way more significant. Second, look for multiple wicks at that level. Do you see the price getting rejected there over and over? And finally, be patient. Wait for the next candle. Does it actually continue in the direction your pattern suggested? That's your confirmation. And here's a fantastic little pro tip for you. Memorizing all these patterns can be tough when you're starting out. The good news? You don't have to. On platforms like TradingView, you can literally add an indicator that will find and label all these patterns for you, right on your chart. It makes them absolutely impossible to miss. All right, we've covered the patterns, we've covered the confirmation tools. Now let's put it all together into a simple, repeatable checklist you can use before every single trade. This is it, your pre-flight checklist. 4 simple steps. Number 1, identify the zone. Is the price at a critical level? Number 2, spot the pattern. Do you see a clear signal? Number 3, seek confirmation. Do the next candles or wicks back up your theory? And finally, step 4, and this one is non-negotiable. Acknowledge the risk. What's your plan if the market proves you wrong? Because, and this is important, sometimes you can do everything right. You follow the checklist perfectly, and the market will do the exact opposite of what you expect. We call this a false breakout or a fake out, and it is the single biggest risk you face when you trade with patterns. Being prepared for it is a huge part of the strategy. And that really brings us to our final thoughts. Learning to spot these patterns is like learning to read traffic signals. It's an essential skill for sure, but knowing how to react when the signals are wrong and having a plan to protect yourself, that's what separates the beginners from the pros. So the question is, now you can spot the signals, but are you truly prepared to manage the risk?